Listen to me very carefully, because what I'm about to tell you could change the way you look at the silver market forever. Right now, the COMEX, the biggest commodities exchange in the world, is quietly running out of silver. Not in some distant future, not in a year from now, but potentially within weeks or months. And the data is publicly available, yet almost nobody is talking about it. I'm not here to hype you up or sell you anything. I'm here to show you the real numbers, the official reports, and the alarming trend that suggests the physical silver market is heading toward a complete breakdown. By the end of this video, you will understand why the global silver squeeze is not a conspiracy theory. It's a mathematical certainty. But before we dive into the charts and the hard evidence, if you are someone who wants to stay ahead of the curve and understand the hidden truths behind the markets, then hit that like button right now and subscribe to Macro Truth. Trust me, you don't want to miss what's coming next. Let's start with the basics. The COMEX is where silver futures are traded, but more importantly, it holds physical silver in its vaults. That silver is divided into two categories, registered and eligible. Registered silver is the crucial one. It's the metal that has been formally designated as available to satisfy futures contracts. Eligible silver is metal that sits in the vault but is owned by others, like banks or investors, and cannot be touched by COMEX unless the owner agrees. Think of registered silver as the ammunition in the gun, and eligible silver as the bullets locked in a separate safe. For years, the COMEX maintained a comfortable buffer of registered silver, usually between 100 and 150 million ounces. That buffer was supposed to guarantee that no matter how many futures contracts were bought, there would always be physical metal to deliver. But over the past 2 years, something strange and deeply concerning has happened. That registered inventory has been draining like a bathtub with no stopper. Let me give you the real data as of the latest COMEX reports. In early 2021, registered silver stood at roughly 125 million ounces. By the end of 2022, it had fallen to under 90 million. By mid-2023, it dropped below 60 million. And as of this week, registered silver has collapsed to just above 30 million ounces. Do you understand what that means? 30 million ounces might sound like a lot, but in the world of COMEX futures, where a single contract represents 5,000 ounces, that is only enough to cover about 6,000 contracts. Yet there are hundreds of thousands of open contracts, many of them held by speculators who have no intention of taking delivery. The problem is that when someone does want physical delivery, and lately, more and more entities are choosing to take delivery instead of rolling their positions, the COMEX has to find the metal. And that metal is simply not there in the registered category. The only way to replenish registered stocks is to pull from eligible, but eligible holders are not willing to convert their metal because they see the writing on the wall. They know that once registered runs out, the price has nowhere to go but up. Now you might be thinking, but Macro Truth, isn't this just a temporary dip? Won't more silver come into the vaults? That's the dangerous assumption that keeps most investors trapped. The reality is that global silver production is not keeping up with demand. For years, silver has been treated as the poor cousin of gold. But silver is an industrial metal as much as it is a monetary one. Solar panels, electric vehicles, 5G technology, and medical devices all require silver. In fact, industrial demand for silver hit a record high last year, surpassing 1 billion ounces for the first time ever. At the same time, mine production has been flat for nearly a decade. There are no new megamines coming online. And here's the kicker. The Silver Institute has reported supply deficits for 3 consecutive years, with this year's deficit projected to be the largest in history. So you have a structural deficit, record industrial consumption, and COMEX registered inventories crashing to multi-decade lows. That is not a coincidence. That is the market screaming for help. But wait, it gets even more intense. Historically, when registered silver levels fall below 40 million ounces, we see major dislocations in the futures market. The last time this happened was in 2020, when the price of silver exploded from $12 to nearly $30 in a matter of weeks. But back then, the total supply situation was healthier. Today, we have the added pressure of a global banking system that is shaky, central banks hoarding gold, and a growing awareness among retail and institutional investors that paper silver, meaning ETFs and futures contracts, is not the same as holding the physical bar in your hand. We are seeing a phenomenon known as backwardation on the COMEX, where near-term futures prices are higher than longer-term prices. That is a classic sign of physical scarcity. It means that right now, the market is willing to pay a premium for silver that can be delivered today, not tomorrow. And when backwardation appears in a commodity like silver, it often precedes a massive price spike. Think about the Hunt brothers in 1980 or the silver rally in 2011. Those were driven by paper speculation. This time it is driven by actual physical shortages. That is far more powerful and far more sustainable. I want you to look at one more data point. According to the latest Commitment of Traders report, the commercial banks and large speculators have never been more net long on silver. These are the smart money players, the ones who always seem to be on the right side of the trade. And they are betting that silver prices are about to go parabolic. Meanwhile, the small retail traders, the so-called dumb money, are still net short, still believing that the Fed will keep rates high and crush commodities. That is the classic setup for a massive short squeeze. But this isn't just a short squeeze. This is an inventory squeeze, a supply squeeze, and a structural deficit squeeze all happening at the same time. If you are holding paper silver, like an ETF that claims to be backed by physical metal, you need to read the fine print. Many ETFs allow for cash settlement or have clauses that let them delay delivery indefinitely. The COMEX itself has emergency rules that could force settlements in cash rather than metal. That means if you think you own silver but you only own a digital IOU, you could find yourself holding nothing of real value when the system breaks. Now, I'm not here to give financial advice. I'm here to present the real data, the kind that Macro Truth is known for. And the data says that the COMEX silver market is on life support. The only question is how long the charade can continue. Some analysts say we have a few months of registered supply left. Others say that if a few large players demand delivery simultaneously, the whole fragile system could crack in a matter of days. Remember what happened to nickel on the London Metal Exchange in March 2022? Prices doubled in one day, then trading was halted, and many contracts were simply canceled. That same scenario, or worse, is entirely possible for silver. The difference is that silver is a much larger and more widely held market. A disruption there would send shockwaves through the entire financial system. Central banks might even be forced to step in, but they cannot create silver out of thin air like they do with paper money. That is the ultimate irony. The world's monetary system is built on fiat currency that can be printed infinitely, but real money, gold and silver, is finite and increasingly scarce. And right now the most liquid market for real silver is showing clear signs of terminal distress. So what can you do with this information? That depends on your personal situation. Some people choose to buy physical silver in the form of coins or bars, taking delivery and storing it themselves. Others prefer exposure through mining stocks, which offer leverage to the silver price but come with their own risks. And some simply watch from the sidelines, waiting for the chaos to unfold. Whatever you decide, the time to think about it is now, not after the headlines scream that silver has run out. Because once the mainstream media picks up this story, the premiums on physical silver will skyrocket, and you may not be able to find any at any price. I've seen it happen with toilet paper during the pandemic, and with lumber and with semiconductors. When scarcity becomes obvious, people panic, and in a panic, the ones who prepared come out ahead. Before I wrap this up, I want to ask you for two favors. First, if you found this information valuable, hit the like button and share this video with at least one person who needs to understand what's coming to the silver market. The more people who are aware, the less likely that a few big banks can quietly manipulate the system. Second, drop a comment below. Tell me your take on the silver shortage. Do you think the COMEX will eventually default, or will they find a way to kick the can down the road? I read every single comment, and the best conversations happen in that section. And if you haven't already, subscribe to Macro Truth and turn on the notification bell, because I'm going to follow this up with a part 2 that breaks down exactly which silver stocks and physical products offer the best protection in a crisis. You don't want to be the last one to know. Thank you for listening, stay vigilant, and remember, the truth is always in the data. This is Macro Truth signing off.